Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee about where your money could really grow. Today we're diving deep into Cenovus Energy, ticker CVE, an integrated Canadian oil and gas player that's been making serious moves lately. Let's kick things off with the big picture. Cenovus has been riding a wave of operational strength, posting record upstream production in the first quarter of 2026 and beating earnings estimates thanks to higher oil sands output and solid refining margins. The stock hit a 52-week high recently and is up over 47% in the past year, outpacing a lot of the energy sector. Cenovus develops, produces, and markets crude oil, natural gas liquids, and natural gas primarily in Canada, with operations stretching into the United States. Founded in 2009 and headquartered in Calgary, the company runs upstream exploration and production alongside downstream refining and marketing through retail, commercial, and wholesale channels. With about 7,150 full-time employees and Jonathan McKenzie at the helm, it's a pure-play energy name focused on efficiency and shareholder returns in a volatile commodity environment. On the revenue side, Cenovus generates the bulk of its top line from upstream oil sands and conventional production, with downstream crude throughput adding stability. Recent results showed downstream utilization hitting 97% at 458,500 barrels per day, while overall production climbed to record levels. Geographic exposure leans heavily toward Canada, with meaningful U.S. contributions, giving the company a North American footprint that helps buffer regional price swings. Turning to earnings, the first quarter 2026 numbers came in strong. Net income rose year over year on the back of higher upstream volumes and better refining margins, with earnings per share topping Wall Street estimates. Key metrics like return on equity near 15% and solid operating cash flow underscore improving profitability. The beat wasn't just about production either. Cost discipline and throughput efficiency played big roles in expanding margins. Looking at management commentary from the most recent earnings discussion, leadership highlighted consistent execution across upstream assets, operational reliability improvements, and a clear commitment to returning capital to shareholders through dividends and buybacks. They emphasized growth initiatives even in a challenging price environment and pointed to strong free cash flow generation as the foundation for future returns. From a balance sheet perspective, Cenovus carries total assets around $63 billion with manageable leverage. Debt to equity sits near 0.42. Cash flow from operations has been robust, supporting capital expenditures while still delivering positive free cash flow in the billions. The company maintains a current ratio above 1.5 and continues to fund dividends at a sustainable yield near 1.9%. Retained earnings have grown steadily, reflecting years of reinvestment and profitability. On valuation, shares trade at roughly 16.8 times trailing earnings and 1.6 times sales, which looks reasonable for an integrated energy name with strong production momentum. Forward multiples suggest the market is pricing in continued growth, and the enterprise value sits near $89 billion. Compared with peers in the oil and gas integrated space, Cenovus doesn't scream overvalued, especially given its recent operational outperformance. Strengths include record upstream production, earnings beats, and disciplined capital returns. Weaknesses center on commodity price sensitivity and historical earnings volatility. Opportunities lie in further production growth and refining optimization. Threats include oil price swings, regulatory changes in Canada, and broader energy transition pressures. Overall, the profile tilts positive for a company executing well in its core business. Looking at the price action, CVE has delivered impressive momentum, up 4% in the past week, nearly 28% over 1 month, and 50% over 6 months. The one-year return of 47.6% and 5-year gain exceeding 213% show real long-term value creation. The stock has been outperforming the broader industry on shorter timeframes, though investors should watch for pullbacks after such a strong run. For intrinsic value, a discounted cash flow approach using historical financials and standard assumptions points to a fair value around $33 per share. That compares favorably to the current trading level near $30, suggesting the shares could still have room to run if production targets and margin trends hold. The model incorporates a 10% discount rate and modest terminal growth, painting a picture of undervaluation relative to the company's cash flow potential.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.